to do the Spotlight Referral of the Week. Today we're with Jamie Johnson, and she's with Christian Roberts Mortgage. So let's talk to Jamie. Okay, so Jamie, tell us about what is going on with the market and what are some of the rates that are happening right now.
Well, currently rates are very low. They're in, for a purchase, you're in your low threes. That would be on a 30-year fixed. Any type of refinance, you're still going to be in the threes. You'll probably be a little bit above 3.5. But depending on the term, the 3.5 be about a 30-year fixed, and then thanks.
You're welcome.
And you can get 3% today on a 10-year fixed if you're looking for a shorter term. But right now is an excellent time to buy, especially in Utah. I know that the market's really moving forward, and from what I hear, we're kind of back in, for properties. There's multiple offer scenarios going on for properties again, and it's very exciting because that's how it was in 2005. So we're in a good market.
We are. So how much is a down payment right now for a first-time home buyer? What are some of the programs a first-time home buyer could?
First-time home buyer, there are some options. The best rate they're going to get is going FHA. It's the lowest down payment. I believe they're today probably 3.125% for a 30-year fixed.
Okay.
That requires 3.5% down. If they want to go Utah Housing, if they don't have a down payment, then what Utah Housing will do is they will do an FHA first, and then a up to 6% second mortgage to cover that 3.5% down payment, and then any closing costs. But because it is a buyer's market, a lot of times you can negotiate, as you know, Michelle, the seller concession to pay those closing costs.
Absolutely. So because this is your niche, what does an investor have to do right now? I personally used her for 7 years for my properties and for my investment properties. So as that being your niche, what is...
For investors, I mean, you need to have cash. You got to have at least 20% down. And if you're wanting a better rate, you're going to need at least 25% down. That's where you're going to get the best rate.
What about the seasoning and the holding?
The seasoning, as far as like a fix and flip goes?
Right. Because that's what's happening right now, more so than the buy and holds for the rentals.
I guess it would depend. I mean, if they're just going to fix and flip something for a couple months, I'd really like to look into a hard money option.
Okay.
To where they won't have a penalty. That is an option.
Okay.
But as far as that down payment, about 20-25%.
Okay. So now what if somebody wanted to do a buy and hold?
Well, it really
as
just
a non-owner occupied.
Non-owner occupied, you still need that same down payment. But a buy and hold, as far as like if they just keep the property,
right,
rent
as a
it
rental,
out.
yeah.
Yeah, I mean, they're going to want to go on a 30-year fixed because of the rates. Like, why not? I would want to price out maybe like an ARM if they just want to have it like 3 to 5 years.
Right.
They could get a little bit lower on the interest, but.
And our LTV is still, which is loan to value for those of you that don't know.
Loan to value.
Is at 80%, right?
80%, 75%, you're going to get better pricing if you're an investor.
Okay, now I have one final question. I know that back in 2005, 2006, we were doing the 80-20s, and that's no longer even an option at this point?
Not as an investor, not as a non-owner occupied.
But as an owner occupied, is that still something that...
Yes, that is something you can do. You can go up to, I believe it's 95%, do like an 80-15.
So you're still having to come in with that 5%.
But, I mean, there's programs out there that will go up to 95% with no mortgage insurance.
Oh.
It's called a lender-paid mortgage insurance. And how that works is they just give you a higher rate, and the lender pays that mortgage insurance premium in lieu of you having to pay your own mortgage insurance.
Right, but your payment still went up. So is the payment still the $100 that the mortgage insurance would have been?
I think it depends because there's a lot of factors that go into pricing not only a mortgage, but the mortgage insurance as well.
Right.
It goes off the loan to value, it goes off of credit score.
Right.